안녕하세요. 오늘 날씨 진짜 좋네요.
네, 그러게요.
꼭 지난주 비트코인 서울 2025 컨퍼런스 때 같지 않나요? 그 열기가 아직도 느껴지는 것 같은데요.
네, 정말 뜨거웠죠.
맞아요. 특히 현장에 못 오셨거나 아니면 내용을 다시 한번 좀 복습하고 싶다 하는 분들을 위해서요. 오늘은 비트코인 서울 2025의 하이라이트 세션 중 하나였던 비트코인 파이낸스 포럼, 탈중앙화 시대의 금융질서 재편. 네, 이걸 함께 살펴보려고 합니다.
그거 정말 흥미로운 논의였죠. 그 스테판 리베라가 사회를 보고 프레스턴 피시랑 민와일의 조셉 추 이분들이 나와서 전통금융, 그러니까 트레드파이랑 탈중앙화 금융, 디파이 사이의 현재와 미래, 또 거기서 비트코인이 어떤 역할을 할지 그런 깊이 있는 대화가 오갔습니다.
네, 그럼 본격적으로 한번 파헤쳐볼까요? 첫 질문부터가 상당히 근본적이었어요. 세상의 부대부분은 아직 전통 금융 시스템 안에 있는데 비트코인이 탈중앙화된 화폐가 된다는 건 이게 대체 어떤 의미일까 하는 거였죠.
네, 여기서 조셉 추는 바로 완전한 디파이 세상으로 가는 게 아니라 하이브리드 형태를 거칠 거라고 봤어요. 그러니까 중앙화 금융 C파이랑 디파이가 공존하는 그런 과도기요.
하이브리드요?
네, 자기 회사 민와일의 그 비트코인 연계 생명보험 상품. 이게 딱 그 예시라고 할 수 있죠. 그러니까 법정화폐 가치 하락을 좀 걱정하는 비트코인 보유자들한테 익숙한 금융상품 틀 안에서 비트코인 노출 기회를 주는 거죠.
하이브리드라 흥미롭네요. 근데 그렇게 자본이 비트코인 쪽으로 넘어온다면 그 많은 돈은 대체 어디서 오는 걸까요? 이것도 중요한 질문이었잖아요.
그렇죠. 여기서 이제 프레스턴 PC가 과거 통화 실패 사례들을 좀 보니까 고정 수입 자산, 그러니까 채권 시장 가치가 먼저 무너지면서 그 돈이 비트코인으로 흘러 들어올 가능성이 크다, 이렇게 예측을 했어요.
채권 시장부터요?
네. 반면에 애플 같은 우량 주식은 명목 화폐 기준으로는 뭐 잘 버티겠지만 비트코인 기준으로 보면 오히려 가치가 떨어질 거다, 이렇게 봤고요. 이 과정이 한 6년에서 10년 그 정도 걸릴 수 있다고 봤죠.
6년에서 10년이라 꽤 긴 시간이네요.
근데 여기에 조셉 추는 좀 현실적인 부분을 지적했어요. 뭐냐면 현재 비트코인 생태계에는 안정적인 현금 흐름을 만들어서 이자를 줄 만한 기업이 아직 부족하다는 거예요.
그렇죠. 아직은 좀.
네. 그래서 PC가 말한 것처럼 채권 시장 자금이 바로 비트코인으로 와서 비트코인 채권 시장 같은 걸 만들기는 아직 좀 어렵지 않냐, 이런 입장이었죠. 비트코인을 이자 자산보다는 가치 저장 수단, 디지털 금처럼 보는 시각에 좀 더 가까웠습니다.
그렇군요. 확실히 관점 차이가 좀 느껴지네요. 그리고 또 뜨거웠던 주제가 마이크로 스트래티지. 이런 기업들의 비트코인 매입 전략이었잖아요.
맞아요. PC는 이걸 되게 영리한 금융공학으로 봤어요. 그러니까 법정 화폐 가치가 연 한 8에서 10%씩 떨어지는데 비트코인은 장기적으로 훨씬 더 오를 거니까 그 차익을 노리는 거죠.
부채를 내서라도 비트코인을 사는 게 이득이다.
그렇죠. 부채를 통해서 비트코인을 매입하는 게 합리적이다, 이런 주장이었고요. 단기 변동성은 좀 감소하더라도요. 반면에 조셉 추는 좀 더 비판적이었어요. 이 회사들을 진짜 비트코인 회사라기보다는 비트코인에 투자하는 달러해나 기반 회사로 봐야 한다, 이렇게 규정을 했죠. 일종의 규제 차익 거래 측면도 있다고 봤고요.
규제의 차익 거래요.
네. 그리고 여기서 특히 재밌는 게 그 M&AV 문제를 제기했어요. 순자산 가치 대비 시가총액 비율이요. 이게 만약에 1 미만으로 떨어지면 경영진 입장에서는 비싼 비트코인을 팔아서 상대적으로 싼 자사주를 사야 한다는 압박이 생기거든요. 주주 가치를 위해서요. 근데 이게 마이크로 스트래티지가 맨날 절대 안 판다, 네버 셀고 하는 거랑 충돌할 수 있다는 거죠. 상당히 날카로운 지적이었습니다.
와, 그 M&AV 이야기는 진짜 핵심을 찌르는 것 같네요. 이게 결국 기업들이 비트코인을 재무제표에 어떻게 넣을 거냐 하는 문제로도 이어졌죠. 심지어 비트코인으로 재무제표를 쓴다는 얘기까지 나왔고요.
네, 맞아요. PC는 심지어 애플 같은 세계 최고 기업도 지난 10년 매출이나 순이익을 비트코인으로 환산하면 오히려 줄어든 걸로 보일 수 있다, 이렇게 주장했어요. 이건 기존의 기업 가치 평가 방식 자체에 근본적인 질문을 던지는 거죠.
그렇죠. 기준이 달라지니까요.
네, 실제로 그 민화일은 최근에 비트코인 기준 재무제표를 발표하면서 이런 변화를 좀 보여주고 있고요. 비트코인 기준으로 이익이 꼭 늘지 않았더라도 그 가치를 지켜낸 것만으로도 대단한 성과로 볼 수 있는 시대가 올 수도 있다는 거죠.
야, 그렇다면 만약 진짜 비트코인이 기축통화처럼 되는 이른바 비트코인 표준 시대가 온다면요. 기업들 행동은 어떻게 바뀔까요?
PC는 지금의 법정 화폐 시스템이 기업들한테 단기 이익만 쫓게 만들어서 재무 구조를 약하게 만든다고 봤어요. 약간 비바람에 쉽게 쓰러지는 약한 나무 같다고 비유했죠.
약한 나무요. 재밌는 비유네요.
네. 근데 비트코인 표준 아래에서는 인센티브 구조가 바뀌어서 기업들이 장기적인 생존을 위해서 좀 더 튼튼한 재무 구조, 그러니까 강한 나무를 스스로 만들게 될 거다. 이렇게 주장했습니다.
장기적인 관점을 갖게 된다.
그렇죠. 추도역에 대해서 장기적으로 건전한 재무 구조를 지향해야 한다는 점, 일종의 창조적 파괴가 필요하다는 점엔 동의했어요. 다만 현재 대기업들 재무 상태는 생각보다 건전하다. 오히려 최근 금리 인상 같은 거에 더 힘든 건 중견 기업들 아니냐. 이런 현실적인 반론도 좀 덧붙였고요.
그렇군요. 마지막으로 짚어볼 점인데요. ETF 승인이나 기관들의 대규모 비트코인 보유. 이게 오히려 비트코인의 그 탈중앙성을 해치고 중앙화를 부추기는 거 아니냐. 이런 우려도 있었어요.
네, 패시도 그 위험은 인정했습니다. 그래서 비트코인을 많이 가진 기업들한테 커뮤니티가 계속해서 준비금 증명, 프루프 오브 리저브스를 요구하는 것처럼 감시를 해야 한다고 강조했죠.
아, 준비금 증명이요? 실제로 들고 있는지 확인하는 거.
네, 맞습니다. 이게 없으면 이제 뱅크런 같은 사태에 취약해질 수 있으니까요. 특히 레버리지, 그러니까 빚내서 비트코인 사는 전략은 시스템 전체의 위험을 키울 수 있다. 이런 지적도 있었고요. 추 역시 그 레버리지를 너무 많이 쓰는 전략은 위험하다고 동의했어요. 물론 레버리지 없이 옵션 매도 같은 걸로 운용하는 곳도 있지만 금융공학보다는 비트코인 생명보험처럼 비트코인 자체로 뭔가 실질적인 가치를 만드는 그런 유기적인 비트코인 사업 모델에 더 주목해야 한다. 이렇게 강조했죠.
와, 정말 짧은 시간이었는데 굉장히 밀도 높은 이야기들이 오갔네요. 비트코인이 단순히 투자 자산을 넘어서 금융 시스템 전체의 어떤 규칙이나 인센티브를 어떻게 바꿀 수 있을까? 여기에 대한 정말 다양한 관점과 깊은 고민을 엿볼 수 있었던 것 같습니다.
맞습니다. 특히 그 기업들이 비트코인을 받아들이는 방식의 변화, 또 그게 가져올 시스템 전체의 인센티브 구조 변화, 그리고 그 과정에서 비트코인의 핵심 가치인 탈중앙성이 어떻게 유지될 수 있을지 그 긴장 관계를 살펴보는 게 아주 흥미로운 지점이었습니다.
저는 개인적으로 프레스턴 피시가 말했던 그 강한 나무 비유가 계속 머릿속에 남네요. 비트코인이 단순히 가격이 오르내리는 걸 넘어서 어떤 경제 주체들의 행동 방식 자체를 바꿀 수 있겠다. 그런 가능성이 보여서 무척 인상 깊었습니다.
저는 그 조셉주가 지적했던 M&AV 문제랑 유기적인 비트코인 사업 모델의 중요성, 이 부분이 기억에 남아요. 뭐랄까, 이상과 현실 사이의 균형, 그리고 지속 가능한 성장을 위한 고민 같은 게 느껴져서 그랬던 것 같습니다.
자, 오늘 이야기는 여기까지입니다. 이 거대한 변화의 물결 속에서 여러분은 또 어떤 준비를 하고 계신가요? 한 번쯤 스스로에게 질문을 던져보시는 것도 좋을 것 같습니다. 다음 시간에 더 흥미로운 내용으로 찾아뵙겠습니다. 감사합니다.
Welcome to a special deep dive, really tailor-made for you. Today, we're taking a look back. We're going to revisit the highly anticipated Bitcoin Seoul 2025 conference. We want to focus specifically on the insights from the Bitcoin Finance Forum panel there. So our mission really is to bring the essence of that event right to you. Maybe you couldn't make it to Seoul and you want to catch up, or perhaps you were there and just want to revisit those key discussions, maybe cement your understanding a bit more. We've pulled some key moments, some excerpts from a really fascinating panel. It featured Stephen Livera, the Bitcoin podcaster, as moderator, and alongside him were Preston Pish, known for his super deep market insights, and Joseph Cho, the general manager at Meanwhile. They're leaders in blockchain-based insurance and credit. We're going to try and unpack the most important nuggets from this event, just, have a natural chat about it. Okay, let's unpack this.
Yeah, it really was a pivotal session. I mean, the way they laid out the potential intersection of, TradFi and Bitcoin's decentralized world felt like a roadmap.
It really did. And they jumped right in, didn't they? Straight into that core tension. This idea of two worlds. You've got traditional finance TradFi, and then this emerging decentralized finance space, DeFi.
Right. And they kicked off by highlighting where most global wealth actually sits today.
Yeah.
Preston Pish had this really compelling chart from Jesse Myers.
Oh, yeah.
Yeah, it showed most wealth is tied up in things like real estate equity or big stock portfolios, and it's largely held by older generations, right? Baby boomers, mostly. These are folks who are very comfortable with the TradFi experience they know. They're frankly less comfortable with navigating on-chain DeFi stuff.
Okay, so that sets up the big question the panel tackled. if Bitcoin is supposed to be this truly decentralized money, what does that actually mean for all that existing wealth, that centralized wealth? How do we even bridge that gap?
Well, Joseph Cho from Meanwhile was pretty clear. He said, look, we're not just going to jump into a purely Bitcoin world overnight. It's not realistic. He sees it as more of a transitional phase, or maybe a hybrid approach, moving from centralized finance CeFi gradually towards DeFi. And Meanwhile's own strategy, it really shows this. They're trying to attract Bitcoin holders who are worried about fiat losing value, offering them insurance products. They're building a bridge, essentially, embracing that hybrid model. Cho thinks it's a totally valid, necessary step.
That makes sense, a gradual shift. So what about Preston Pysh? How did he see purchasing power actually shifting during this transition?
Preston brought this really interesting historical perspective. He said, if you look back at currency failures, what usually happens, fixed income products like bonds and that failing currency, they typically go to zero. And even if the local stock market seems to surge, like goes parabolic in local currency terms, in real terms, measured against something like Bitcoin, it's actually declining significantly.
Wow. So the nominal value goes up, but the real value crashes.
Exactly. And he predicted this shift wouldn't necessarily start in, say, the U.S. bond market right away. It's more likely to show up first in developing nations' bonds, then kind of spread. But he also added that high-quality stocks, the ones generating strong free cash flow, might still do okay in dollar terms. They could act as a sort of safe haven for people who don't quite get the Bitcoin picture yet.
Ah, like a psychological buffer. That's interesting. Did Preston give any kind of timeline for when the wider public might catch on?
Yeah, he did. His long-term view is that, well, the general public is probably going to struggle to really understand Bitcoin's necessity, its valuation, for maybe another 4 to 8 years.
4 to 8 years still.
Yeah, people will still be asking, why buy it at $500,000? Or what's backing it? Those kinds of questions. It just underlines that this transition won't be instant. And those hybrid models Joseph Cho talked about, they're going to be absolutely key. So what did this mean for you listening? I think it suggests patience, right? Understanding the shift is gradual, not like flipping a switch.
Okay, so that gradual shift leads us to another big challenge they tackled. How do you even create a bond market or a debt market that's denominated in Bitcoin?
Yeah, it's a tough one. For a really tough nut to crack.
Yeah.
I mean, for a Bitcoin bond market to really take over from existing ones, you need companies earning revenue in Bitcoin. Why? So they can pay the interest.
Right, the coupon payments.
Exactly. Companies usually issue debt for things like capital expenditure, right?
Yeah.
Building factories, expanding. The Bitcoin ecosystem right now just doesn't have that widespread operational need for debt on a massive scale. Bitcoin is still mostly seen as digital gold. It's aiming to capture maybe an $18 trillion gold market versus Bitcoin's current, $2 trillion market cap? But a debt market needs those regular coupon payments. And the big question is, where does that Bitcoin interest come from? Ultimately, corporations or governments have to generate it.
And that feels like a bit of a contradiction, doesn't it? Because corporations issuing stock, issuing debt, they're inherently centralized. We're talking about decentralized money. But the main users in this corporate sense are centralized structures. How did they talk about reconciling that?
That's precisely the point. And this is where MicroStrategy comes in, is this huge, fascinating case study.
Yeah.
Michael Saylor, famously, has used different kinds of preferred stock. He calls them Stripe, Strike, and Stride. It's quite unique.
Right.
Each one is structured to raise money specifically to buy more Bitcoin. And they pay dividends, like 8–10%. Now, Saylor connects this to the global M2 growth rate, basically how fast fiat money supply is expanding, around 12% globally. He contrasts that with Bitcoin's expected annual growth. He estimates that using its power law curve, maybe 40–50% per year.
Okay.
So he sees roughly a 30% spread there. That difference makes it super attractive for long-term holders, he argues, even with Bitcoin's short-term volatility. And MicroStrategy has this massive $60 billion balance sheet. So for them, he says, those interest payments are minuscule, easy to manage.
Definitely an aggressive strategy, but you can see the calculation behind it. Were there other corporate approaches discussed, ones that maybe weren't quite so all in?
Oh, yeah, definitely. In stark contrast, you had Joseph Cho talking about Meanwhile's approach, much more conservative. They're a dollar-based company, allocating just a cautious 3% to Bitcoin, a very different philosophy. And then there was Metaplanet in Japan, another really interesting one. It's a Japanese yen-based company, but it trades at a huge premium, like 5 times its underlying asset value.
5 times. Why?
Mainly because owning Bitcoin directly is difficult for investors in Japan. So there's huge demand for any kind of Bitcoin exposure, even through this proxy. But as Joseph Cho pointed out, it creates this weird situation for a value investor. Why pay 5 Bitcoin worth of value for assets that are only worth 1 Bitcoin? It's purely driven by that access premium.
Wow. Okay, it feels like we're really just starting to see how complex these interactions are between old structures and this new money. It's not just buy and hold.
Not at all.
Yeah.
And that leads to maybe one of the most mind-bending ideas from the panel. From Joseph Cho's company, meanwhile, they're actually publishing audited financial statements denominated in Bitcoin.
Whoa, okay. Bitcoin-denominated financials. That sounds revolutionary. What do they even look like?
He said they look weird. That was his word. Like literally a B for Bitcoin, then numbers out to 5 decimal places.
Ah, I can imagine.
It's a completely different accounting reality. And Preston Pish actually shared a personal experiment he did that highlights the impact.
Ah, okay. Preston applied this kind of green-pilled thinking, as they call it. What did he look at?
He took Apple, arguably one of the most successful companies ever. He went back over the last decade, took their revenue, their net income, and converted it all into Bitcoin terms.
Okay, wow.
The result was pretty shocking. Apple's revenue and profit, measured in Bitcoin, were actually declining over that period.
Declining Apple in
Yeah.
Bitcoin terms.
Yeah. Which just flips traditional valuation models upside down. Things like discounted cash flow, IRR, they usually need positive cash flow growth. The implication is wild. In this new paradigm, a company whose Bitcoin-denominated net income doesn't decline, that company would be considered absolutely crushing it.
That really gets to the heart of being green-pilled, doesn't it? Seeing the world through that Bitcoin lens. It forces you to ask, well, if even Apple is declining in Bitcoin terms, what does that mean for you? How should you think about your own financial future in that context?
It's a massive paradigm shift. And it brings up the whole challenge of how a fixed money supply economy actually works. Preston drew parallels to the 1880s gold standard. In a system like that, prices for goods and services generally go down over time because the money isn't being inflated away.
Right. Deflationary pressure.
Exactly. But there's a key difference with Bitcoin. No monetary policy. No central bank deciding to ease things during a downturn. That's a distinct consideration maybe, but a really important one for the long term. We've kind of designed a system without monetary policy levers because of past abuses, but that has its own dynamics.
Okay, shifting gears slightly. The panel also got into the impact of central bank actions and how current incentives shape corporate behavior.
Yeah, this was critical. The argument is that fiat incentives, globally, push businesses toward short-term profits, often at the expense of balance sheet health.
How so?
Well, they focus on extracting profit now, assuming that if things go bad, if their balance sheet gets weak, the central banks will just bail them out. Preston used this analogy of trees in a storm. Nature designs trees to withstand, say, a 50-mile-per-hour wind. But the fiat system encourages businesses to be like trees that might fall over in a 3-mile-per-hour wind, because they expect a central banker safety net.
Okay, I see.
Bitcoin, the argument goes, changes that incentive structure. It forces businesses to build robust balance sheets that can actually weather storms, real market downturns. Because there's no bailout coming. This encourages creative destruction. Weaker companies fail, freeing up resources for stronger ones. It's potentially a healthier, more competitive market.
Though they acknowledge right now, big tech firms are generally healthy. But mid-market companies relying on private credit, they look very vulnerable. Some reports suggest 17% can't even cover their interest payments right now.
That's worrying. So given all this, let's talk adoption. What happens when all this new money starts flowing into Bitcoin through things like ETFs, corporate treasuries? Does that actually challenge Bitcoin's core value proposition, its decentralization?
Preston, especially, seemed quite concerned. He argued, yes, it absolutely challenges decentralization.
Well, you've created this new money, and now you have big institutions, maybe even nations, corporations accumulating huge amounts. The big concern is transparency. These large entities holding Bitcoin aren't always legally required to provide full proof of reserves to the public. Audits happen, sure, but public disclosure isn't always mandated for private firms. He felt strongly that the Bitcoin community needs to keep pushing for that transparency, hold these large players accountable. We saw the potential systemic risk in 2022, right? When MicroStrategy came close to a margin call, a potential liquidation, nobody really knows what the fallout would have been for the whole market. People raise security concerns about publishing addresses, and that's valid. But for public entities especially, transparency seems crucial.
And that lack of transparency, or the corporate structure itself, leads to this other weird paradox they discuss, the MNAV less than 1 problem. What's that about?
Yeah, this is a really subtle but potentially huge point that doesn't get talked about much. MNAV is market value of net assets. If a company's stock price falls below the value of the Bitcoin it holds in its treasury, so its MNAV is less than 1 tree, things get tricky. There's a very strong incentive, maybe even a legal duty to shareholders, for that company to sell its Bitcoin and use the cash to buy back its own stock, which is cheaper.
Wait, sell Bitcoin to buy stock?
Exactly, because it boosts shareholder value directly. It's the fiduciary thing to do, potentially. This scenario is almost never discussed openly by the maximalists. Now, contrast that with Metaplanet in Japan, trading at 5x MNAV. Their incentive is the complete opposite. Buy as much Bitcoin as you can, because it effectively lowers the premium on your shares, giving shareholders more underlying BTC value per share. It creates this flywheel effect, as Preston called it. It can amplify momentum, both on the way up and potentially on the way down, if MNAV drops below 1.
So that never sell Bitcoin mantra really clashes hard with the realities of being a public company with duties to shareholders. A major tension point.
A huge tension point.
Yeah.
It highlights a fundamental conflict.
Okay, so it seems like there are really two different ways companies are approaching Bitcoin right now. How did the panel distinguish those?
Yeah, they drew a distinction between what you might call the financialization of Bitcoin, which is mostly these treasury companies using capital structure arbitrage.
Like MicroStrategy's debt for Bitcoin strategy?
Exactly, leveraging traditional finance tools to stack sats, basically. And then you have what they called organic Bitcoin businesses.
No.
These are companies that actually generate more Bitcoin through their core operations. Think of market makers who earn fees in Bitcoin, or maybe insurance companies that write policies and collect premiums in Bitcoin. Their business model naturally accumulates Bitcoin. It's not just financial engineering. It's part of their operational loop.
Got it. A fundamental difference in how Bitcoin fits into the business. Was Strive Asset Management mentioned as another example?
Yes, Matt Cole from Strive was there too. They also have a Bitcoin treasury strategy. But he stressed they're not just looking for beta, just market exposure. They're actively hunting for alpha, trying to generate excess returns through smart moves. The example he gave was buying Mt. Gox's bankruptcy claims at a discount, maybe less than 100 cents on the dollar. It's basically distressed debt investing, but the asset they're acquiring is Bitcoin. A clever way to get more Bitcoin for less than the market price.
That is clever, using TradFi techniques to gain more Bitcoin. Okay, so wrapping this all up, what was the general feeling, the prediction about Bitcoin's future role in corporate treasuries?
I think the consensus, and my takeaway too, is that within the next, say, 10 years, Bitcoin is likely to become a standard part of corporate treasuries. Maybe not everyone goes full MicroStrategy, but companies will likely start allocating a small slice, maybe 2-5%, taking it out of low-yielding assets like money market funds, maybe even some blue-chip stocks, and putting it into Bitcoin. And as that becomes more common, more mainstream individuals like you will end up getting Bitcoin exposure indirectly through these companies, even if you don't buy it directly yourself.
Wow, we've covered so much ground here, really diving deep into this Bitcoin finance forum. From that fundamental split between TradFi and DeFi, through all the different corporate strategies, the weirdness of Bitcoin valuation, and then these really serious questions about decentralization versus adoption. It was a packed discussion.
It really was. And what's fascinating, I think, is seeing how this mixed world is shaping up. CeFi systems adapting, trying to use Bitcoin's best features. Centralized companies aren't going away. We'll still need gas stations, food producers, all that basic stuff.
Yeah.
But the financial incentives behind them, that looks set to change profoundly.
Yeah, that's what really sticks with me. It's not just a new asset. It feels like a complete rethink of incentives. And that could potentially lead to much stronger, more resilient businesses, which ultimately creates a more robust economy for you, for everyone, because companies might be forced to be healthier.
Right. And maybe the final thought to leave everyone with is this. If businesses really are re-incentivized to build those strong balance sheets under a Bitcoin standard, what other kinds of shifts, societal, economic, might that unlock? What happens beyond just the world of finance?
That is a great question to ponder. A huge thank you, of course, to the original panelists, Stephen Livera, Preston Pish, and Joseph Cho for sharing all those insights back at Bitcoin Seoul 2025. And to you, our listener, thanks for joining us. We hope this encourages you to keep digging deeper into these fascinating ideas. Until next time.